one particular deal that we're going to cover today. But before we sort of dive into that, Rob, why don't you sort of kick off and tell us what type of business it is that we're talking about here, what the business does, where it's based, and how big it is.
It's a meat processing company based in Portugal. It's 47, isn't it, Steve? 47 million turnover.
47 million. Yep.
Yep. Euro turnover, about 2.5 million EBIT-ish, roughly.
Yep.
It's got its own property that has been solar paneled. It's got another property, another piece of land as well as where they run their solar farm, so to speak. It's run by three members of the same family, the mother, son, and daughter. And there in itself is an interesting dynamic, as much as in the family, as much as from a buyer's perspective. And
And how did,
yeah.
I was going to ask, how did you find this particular opportunity? Because I mean, deals come in from many different sources, but how did you find this particular one?
This particular one came from one of our colleagues. He was in this sector. He's actually based in Spain. So he came across the opportunity, brought it to first myself, and then involved Steve and another guy locally in Portugal. And we formed a bit of a deal team between us because we all bring different opportunities to the table and different ways of doing deals. So I think that's where it came, wasn't it, Steve?
It was. Yep. So I think it started with yourself, hadn't it? Because they wanted to look at particular deal structures and see how we could structure this deal. I crunched some numbers for him, and then the final piece of the final member of the team, we wanted somebody who was local, who knew local laws and local custom, if you like, and that's what brought our fourth member into the team.
And what just in terms of sort of headline numbers, Steve? I mean, what were sort of key numbers, and what was the state of the balance sheet? Was there anything sort of interesting or unique with this one?
Well, balance sheet's really clean, so they don't have any long-term debt. The only thing they did have was an invoice factoring facility, which they were quite heavily reliant due to some of the customers who they're working with. Now, in terms of the P&L, Rob's just given us the outline, the headline figures. There was nothing that sort of caused any concern, but what we did see within this, when we looked at the sales breakdowns, is that they'd also started 3 years ago processed food, traditional Portuguese meals. And when we started to look at the last 3 years worth of accounts, we could see that those sales were doubling year on year consistently. And having had the conversation with them, they hadn't really scratched the surface. They were only really selling within Portugal, I think, Rob, hadn't they?
Yeah,
We
yeah.
knew there were a market, there
And
was a
very
market there.
local as well. They were only
Yeah,
actually they're just between Faro and Lisbon, and they
yeah,
were literally hitting the local area with the local dish.
yeah.
And one of the things that we picked up on is that they could do other local regional dishes using the same product because the same things, wasn't it? So that they were really regional dishes. So I think there was a massive opportunity to expand the product.
Yeah.
So when you first looked at this, then I mean, what valuation wise? I mean, where did you kind of put it when you first had those initial conversations and looked at all the numbers?
Well, that was
Yeah.
interesting before we brought Steve in. Sorry to just jump in there a sec, Steve. Before we brought Steve in, they had very clear ideas about what their expectations was, which was based on the valuation that originally came from the broker. So we had to manage that first and try and find out what it was that they actually wanted themselves and how that kind of what their expectation was on day one and then further down the field. Then when Steve came in, over to you, Steve.
Yeah, so we knew, so they were at 16 million euros. That's where they wanted to be. When we first looked at it, I think we were somewhere like 12 and a half to 13 million. And what we settled on was 14 million euros as a base valuation. But as part of it, and we'll get into this a little bit later, there were bonds to be issued to the sellers of the business over a 5 year period at 6.5%. So the interest they would receive on those bonds would get them to the 16 million. So
Right.
it's one of those times when we looked creatively at what else could we do. We knew there's a property there. Rob's touched on the land opposite across the road from the site. That we also knew there was the potential for the site to become totally self-sufficient because it had all the solar set up. So it was quite an attractive proposition.
So tell us a bit about the shareholders themselves, because it's a family owned business, right? So I mean, what was the dynamic like? How many shareholders were there?
There's actually three. There's the mother, the daughter, and the son. But the dynamics between them is quite interesting because, from my perspective, when the introducer and I went on the initial calls, it was very clear that they wanted clean break. But in once we actually started to get into more rapport building and we found out what their individual needs were, we found that the son had come in and very much built the business to where it was, and he wasn't so keen to leave as the daughter. And the mother obviously wanted to be out straight away, and it was they all sell or no sell. And we then dive into that more over time.
Yeah, and I think the background to it as well is that the father had passed away 2 years earlier, I think it was.
Yeah, yeah,
And I know that Anna had spent an awful lot of time, and she just wanted to get out and do something else. Miguel still had a passion, or still has a passion for the business. And the mum was an interesting story because she was 73, I think, and been with the business in one shape or form for most of her life. And as we were walking around, we'd gone over to Portugal and we're wandering around, and they're explaining all the parts of the process. And we'd start at one part of the factory, and Mum was there talking away in Portuguese. She couldn't speak a word of English, so Rob and I nodded and smiled a lot. Couldn't understand a word she was saying. And then we'd go to a different part of the factory to look at a different part of the process. And a side door would open, and she'd walk through, and we're thinking, how on earth have you just got from over there to here in a few? We actually think she's been cloned. She was
yeah.
everywhere, but she still, but she'd had some ill health, and I think that was one of the reasons that also prompted the sale was because Anna wanted to exit, and they knew that the mum couldn't go on forever, and they really wanted to coax her up the business as well.
And I think that's when we were over there, one of the things that we discovered was the difference in the dynamics between having a chat with them on Zoom and then actually going over there and meeting them face to face was a pivotal point in the whole deal process.
Yeah.
Yeah, there. I mean, the son was actually on board with us fairly early on. The daughter was always kind of holding back. But when we actually went over and met them, the whole dynamic changed. Her body language changed. She opened up to us. She welcomed us. She made local food. Well, that they gave us their produce, and she was totally on board with all four of us, and thought we were part of the family by the end of the day. It was quite an interesting shift over the space of it was well worth the visit
Yeah.
for many reasons, but for that one, if nothing else.
Yeah.
So I mean, you talked a bit about their motivations for wanting to do a deal. I mean, what was your motivation in terms of wanting to do the deal? I mean, what made you think this is a synergy deal?
From my perspective, I'd nothing to do with this particular one. I'd already spoken to a meat processing company in Australia, 150 million turnover. I'd actually, quite funny, the owner of that company actually lived 9 miles away from me in the UK, and we ended up meeting, having lunch, and everything else. Now, off the back of me talking about that somebody introduced me to this deal. That's how it actually came about in the first place. And we said, hang on a sec, there's a group to be had here. And he had other opportunities. I knew of other opportunities. So it was kind of like a really obvious, well, let's put them all together and make a synergy group and grow it from there. So that's kind of where it came from initially.
Yeah.
Um, and I think you, Steve, you saw some other opportunities in there, both like you've already articulated.
Yeah, because we'd also known that from the person who initiated this contact and the discussions, they also had an opportunity in Spain. There was one in France, one in Poland, and even one potentially in South America. So and they were all of, I think the other deals were about half the size of the turnover. So they were sort of 20 to 30 million euro turnover businesses, but still healthy, profitable businesses, all in the same sector. So we could see the opportunity to start to put a group together fairly quickly.
Yeah. So I mean, you talked a bit about the number that they wanted. You talked a bit about the valuation they had in mind for the business and that they wanted some kind of exit. I mean, what else did they want in a deal? I mean, what were they looking for?
Well, one of the key things, they were really keen to sell to people who would look after the business. They didn't. What they also had was one of the larger companies in this sector in Portugal was trying to buy up all of the other smaller businesses. And believe it or not, at 47 million euro turnover, this was one of the smallest in the sector in Portugal. But what they refused to do, they didn't like the fact that this company, this particular aggressive acquirer, wanted to buy the business and just absorb it into what they had. So the company itself the brand would go. They may have lost staff, and they just refused to do it. So we came in with a credible plan. We could demonstrate to them what we wanted to do with the business. We didn't want to take it and break it apart or abuse it, for want of a better phrasing anyway. We wanted to take what they'd spent years building and grow it. So, and we just presented that plan to them while the time, whilst we were over in Portugal with them.
Yeah, one of their concerns was their staff and asset stripping. Yeah,
Yeah.
so when we said that's something we said we don't change the brand, we don't change the culture, we don't change the people. In fact, we had a vision to grow a 250 million group. And the way we were going to do that was through a direct listing, yeah, and then have that global reach, that global opportunity to raise more funds to be able to, and that was part of our overall strategy.
So it's worth maybe digging into that a little bit more in terms of how you went about structuring the deal. So, I mean, what made you think that this would be a candidate for a direct listing, and how did you go from, their initial starting point to then start to put together a deal that worked?
I think from my perspective, it was the fact that one, it was in a foreign territory, so we had to think about how we were going to raise the money to actually acquire the company in the first place. The second one is that it's because it's in another jurisdiction, how do we then use that to get others on board? So we need more of an umbrella. And the other one is that how, from our perspective, if a company's making more than 500,000 EBIT, then one of our first thought processes is let's do a direct listing because of all the benefits that comes with it. And you can leverage bonds, you can leverage shares, you've got that credibility as a PLC. There's a whole load of touch points in there from my perspective that made it a natural thing to turn to.
Yeah. Yeah, I completely agree.
So as far as the direct listing is concerned, sort of understand the reasons that you would want to use a direct listing in terms of what you mentioned, also further acquisition trail, making the whole deal stack. But from the owner's point of view, I mean, how is that positioned? So what's in it from an owner's point of view in terms of the direct listing?
So from the direct listing point of view, they were first and foremost, they were getting their 60 million euros. But what they also understood that as we started to build the group, the shares that they would receive as part of that process would appreciate in value over a period of time. And whilst some of that value could be unlocked as we listed the business, some of it would be locked up for a period of time. But over that time, those shares would significantly appreciate in value. And I think that was the attraction for it. It was also, with it being a bond, it's one of the safer options that we had. It also gives us some more flexibility on how we could structure that deal.
Because one thing you often hear with business owners who go down the direct listing route is that introduction as well into sort of wealth banking and so on. So on a personal level, what does that mean for business owners?
Yeah, so I mean, there are various products that ordinary people like you and I don't get access to, but once you've got into wealth banking, there is a range of financial products which could significantly improve your wealth just by utilizing. We've spoke with people like Julius Baer and one or two others. So once you've got a valuation of your shares, you then qualify to come into private wealth banking once you've achieved a certain level of wealth. Now, one of the obvious ones are Lombard loans, where you can then start to borrow money at 2%. Whereas if we go to market now, we could pay anything between 14 and I've seen 22%.
And on that note, that when you're looking to acquire and scale a group fast, having that public vehicle is a very useful tool because you can go and get Lombard loans if you can if you've got a big enough scale, which we did have in this particular one. It gives us the facility to not only pay that initial consideration so the owners have got that first payday, but also it gives us a war chest to go and acquire other companies. And as because when you go public, you should really have the mindset of being acquisitive. And that was very much our plan. So we had that line of companies that we're bringing in. That initial war chest enabled us to bring the next one in. We could revalue the group, reissue bonds, reissue another Lombard loan, go and get the next company and rinse and repeat. It's exactly what the big boys do. And it is exactly the same philosophy that we were going to adopt. And we also tell any company that's thinking of going direct listing with Synergy that you have to get that acquisitive mindset to add shareholder value. And also, it just enables you to do far more acquisitions far quicker because you're constantly revaluing the group in real time rather than on a SME, which is completely working the opposite way around.
Yeah. And there's just one other point to that as well. What we do find, I'm working on a deal in Switzerland at the minute, and there's obviously this one in Portugal. It is extremely difficult to raise finance in Europe. It's difficult in the UK, but it's even harder in Europe. So by having a listed company, we're in a position where we can start to issue bonds, just as Rob's mentioned there, and it gives us that ability to scale quicker.
In terms of any sort of business owners listening to this and thinking direct listings sound great, I mean, what did this business have that made them a candidate for a direct listing? I mean, what's the criteria then for a business wanting to go down that route?
We've got a minimum level of EBITDA, haven't we, Rob? So we're looking at 500,000 in terms of EBITDA or EBIT. We also then need to make sure that the businesses are in good shape. So this particular company, the financials and the reporting was excellent. They had a lot of their processes all documented. So it was in a good position. In fact, it had been audited. So we've had an official audit being done. Now that covers a 2-year period. And so that's a document that's been signed off by a leading firm of accountants in Portugal. So that is one of the criteria. There's an awful lot of paperwork and admin that comes with having a listed company rather than in the UK, we've got limited companies. There's an awful lot more paperwork and hoops to jump through, if you like. But this business already had a good start because a lot of its systems and processes were very good. So I think they were using SAP, Rob. I think if I'm
Yeah,
not...
exactly. I was just about to say that they were using a very good ERP system, one of the best in the industry, a surprisingly heavy version of it. They had all the tools, bells and whistles, so they could scale. They already had everything in place to scale even bigger than they were. And that way, when we're bringing other companies into the group, we would have used their system as the core for the whole group. So we wouldn't have had to have any further investment on that. And most other companies haven't got that scale of software that they had.
Yeah.
So talk us through the sort of process then around deciding what exchange a company doing the direct listing is going to be well suited for. Because when we talk to business owners, often when you mention a direct listing, a significant proportion of them assume that maybe you're talking about AIM or something like that. So talk us through what the process is and sort of how many exchanges we're talking about that might qualify to be a good fit.
I think there's a number throughout Europe that you could go to. I mean, one of the reasons why this deal's taken slightly longer than anticipated is that we've got a 4-man team, and 2 of us wanted to go with one listing company, and 2 of us wanted to go with another, which caused a bit of not friction, I wouldn't say that, but it slowed the process down because we were trying to decide which way was better. So we wasted some time because one was an inexperienced team, well, an experienced team, but an unknown quantity, and one is an experienced team with a known quantity, and that's the one that Steve and I wanted to go with. So that's kind of slowed it down. But going back to your earlier point, I think it's very key for a business owner considering what is their next move, is quite often their aspiration for their exit valuation is considerably higher than the average buyer is prepared to pay. Because you've normally got what they want and what you're willing to pay. But whereas when you go through a direct listing, that opportunity goes, it flips it on the other ways because you're now looking at a bigger opportunity than where you were. From my perspective, it's like almost a no-brainer. One situation, you're trying to chase the buyer to come up to you. Now you're in the opposite situation where you're actually going to a higher valuation without much effort. Yeah.
Yeah.
And have become far more attractive from an investment point of view and from an investor's point of view as an acquirer. Yes. And it's a much easier exit as well when you get to that point. But you are going to have a lock-in period. So that's something I would point out. If you're going to go down this route, it's not a quick exit, but it is a much bigger exit potentially if you do it the right way.
Yeah.
So we've just had a question come in around the listing valuation. So what was the formula that was used to reach the new valuation?
It was interesting. It was an eye-opener. We spoke with the guys over in Madrid, and there must have been 6 of us on the call. And what we'd presented or what we'd prepared were a number of different valuations. So we presented the traditional EBITDA, multiple of EBITDA. We presented the DCF model, and we presented one, if I get this correct, it's share to sell, which actually presented a valuation which was ridiculously high. So we discounted it, but we presented it to show that we'd considered various options. And then we looked at a blend. And within the blend, we'd looked at worst case, best case, most likely. And we presented what we thought the opening valuation for the group needed to be. And we pitched it at around 48 to 50 million as a valuation as it opened on the stock exchange, which we were looking at, Frankfurt in Germany. And then he said, yep, that's fine. And I'm sat waiting for pushback, questions, no pushback. So the business we were buying was 16 million euros. The group was being valued at 48. Now, straight away, that allows us to issue more bonds, which to Rob's point earlier, gives us that war chest to go out and look at the company in Australia, the one in Spain, the one in France, the one in Poland, etc. So now we had that war chest to enable us to go and acquire businesses that were all what we call earnings per share accretive. It would all have a positive impact on the share price of the group. And just to add to that, as you add more companies to the group gets revalued, which enables you to obtain more bonds, and it goes on. So as long as you continue to be acquisitive, which Rob's point earlier, you're in a strong position.
The other side of it is, just to add to that, is that you've got the bonds, you've got the shares, and you've got the Lombard loans, and you've got equity investors that you can bring in if you want to. Yeah. So there you've got a much bigger play, and it's much easier to bring in equity investors into a public company than it is a private company because they can see what you're doing, and it's all clear and transparent because you have to do that audited accounts and everything else. So, and you're reporting to the markets whenever you do an acquisition anyway. So the whole point of what you're doing here is you're creating huge value, and you've got from a deal maker's perspective, when you're buying companies, I can now walk in and say, I've got a number of tools before I even sit down that I know I can acquire that company, rather than the traditional one where I'm hunting around for invoice finance and all of those types of things. I don't need to even look at those because I've already got a much bigger tool set that doesn't need to affect the operation side of the business.
Yeah.
So we had another question around the seller. So did the seller not ask for more money when they realised that you were listing for 47 million?
We didn't tell them that side of it. So that's been completely blunt. Yeah.
Yeah, and that was a matter for us rather than the seller. We'd given them the deal that they wanted. They were slightly in excess of 16 million euros. So they were very happy. Anna was already spending her share.
Yeah, well, it was actually originally 14, wasn't it? With a bump up of it was 14 million, and we gave them 16 and a half. Basically, they were getting the interest, or however we. But yeah.
So you mentioned a while ago about what it was like doing business in a different jurisdiction and a different culture and different laws and so on. I mean, what was maybe one thing that you'd take from that in terms of it was the biggest challenge that maybe you weren't aware of until you looked to do the deal?
From my perspective, I've done done deals in North America, Australia, and New Zealand. And I think when you do those, they're all running under common law. We all run under Commonwealth law. It's exactly the same. Well, there's some nuances, but they're pretty much the same. So what you do in one, pretty much the same is going to happen in the other. But when you start going to the European Union or outside of that kind of thing, you can run into things that you don't expect, and that's what happened in this particular deal.
Yeah, so there's a property involved that was valued. The property in the land is valued at around about 4.3 million euros. And what we'd wanted to do was a sale and leaseback, so that then we could provide some additional funding in order to give a completion payment to the two sellers, the three sellers. But under Portuguese law, you cannot be seen to sell assets of a business in that way, just to give it to the sellers for them to leave. And the interesting thing is, if you do that, at any one point in time, either the state or the bank or the customers or the suppliers could all walk on site and say, "We don't like what you're doing. You're clearly trying to sell that just to give it to the sellers to exit." And he could be prosecuted personally. So that was something that we had to understand, and we did an awful lot of research, and obviously we had our guy locally in Portugal who helped with all of that. So yeah, that was something that we wouldn't have come up against necessarily in the UK or even anywhere else, like Rob just said, in America, Canada, New Zealand, Australia. You wouldn't have seen that, but it's certainly a feature in Portugal.
And
So
Rob, you mentioned
understanding the local laws when you're doing deals outside of your own jurisdiction, you're not just doing due diligence on the company, you need to do due diligence on local laws in order so you don't get burnt and that you're operating within the legal framework.
Yeah.
what was it like working with a broker? Because you mentioned that there was a broker involved in this. How did that sort of pan out? What was that experience like?
I think there's many different, like in any type of industry, there's different types of people that operate within any trade. There's good brokers, there's bad brokers, there's all different types. So it's not putting them all under one banner. We were lucky that we had a very good broker. He worked with us in the process. He's always been on our side. He did obviously have a valuation that he suggested to them, which was higher than we initially went in at. But that was nothing. That's not going to upset us because that's part of the negotiation process. But he's always been there for us and with us and helped us to navigate through this. But he didn't know some of the local nuances, which we've since discovered. Because he was based in Spain, actually, wasn't he? He's based in Madrid or Barcelona,
Yes,
one of the two.
he is. Yeah, and
Yeah,
and for people, if I don't know if everybody's from the UK here, but for anybody buying it or has bought a business in the UK, changing the bank that mandate is difficult. It's not always as smooth as you would be led to believe. In Portugal, we had to physically be there to sign. They couldn't send papers out in the post. We had to physically, and there were 6 or 7 banks that the business had. So we would have to spend our time going around Coimbra in the local area to visit all the local banks to sign personally, and then it had to be notarized, I think is the phrase.
mm. But they also had a weird thing going on with one of they had like a loan note or something with the suppliers or something like that, wasn't there?
That's yeah.
Yeah, they had a weird thing going on there that we didn't know about. I've never seen it in a UK company, but they had this kind of weird check system, wasn't it?
It was, and we had to make sure that the process of transferring from the existing owners to us would be straightforward, and we were assured that it could happen in 2 to 3 working days. But
That's another point that you and I have been involved with another business where we've actually had this happen to us. When you take over a business or you're looking to take over a business, don't immediately think that you're going to exit the owner because sometimes you need them to stay on board for multiple reasons. It could be for an overdraft facility, it could be for trade agreements, it could be for all sorts of reasons. They can't just leave because you have to have that transition period where you're making that supplier or the bank or whatever feel comfortable with the new ownership and you've swapped that over. In fact, we've had it in 2 companies in the last year. We had it with the motorcycle one as well,
yeah,
where we
yeah,
actually lost a dealership with Harley Davidson because of the way we approached. They just didn't like the fact that somebody else had taken over. Yeah. So you got to be really careful when you're doing deals. It's not just a case of, oh, I'm buying a company, I've got the money, happy days. you've got to be careful, like the transition as well.
I think it was a funny one because that particular business, they they were FCA regulated because they provided financial products, and we'd taken over the company back in February, I think it was, wasn't it?
Yeah.
And the previous November, their FCA approved manager had left and hadn't been replaced, so the business had effectively operated without any manager for the FCA side for a number of months. So when we came in, they got in touch with us eventually and introduced themselves and said, we need to speak to the person who's now looking after it. So that happened to be himself. So I spoke to them and they said, look, we're really not happy that you haven't told us before you bought the business. I said, we didn't know we were going to buy the business until we did. But they were really keen on pursuing it because we hadn't told them and got their approval before we took it over. But this business it actually, in effect, was a distressed company. And it was a fight just to keep it going. So we had to work really quickly. And eventually, when we explained everything and explained the situation, they reluctantly accepted. But they're a strange bunch. The FCA are a really strange bunch.
Yeah. So there's multiple areas that you have to be careful of when buying a company. It's not just a case of hand the cash, do the deal. That's just the relatively one of the easiest parts.
Yeah.
So we have a couple of questions that are along the same sort of line. So it's around issuing bonds to raise funds. So a question around do you go to institutional investors, private high net worths, or someone else? And another question, yeah, also around sort of the mechanism for issuing bonds.
Well, one of our partners actually, as part of the direct listing process, enables us to release funds on day one, but also covers the cost of the actual direct listing. So that's one way we can do it. We can pay for the direct listing, but it depends what you're trying to achieve and what we want as the end goal, and also the value of the company to whether what's the best strategy on that. I don't know if you agree with that, Steve, but
Yeah, they do, and they also handle the issuing of the bonds as well. So that's all
yeah,
part of what you're paying for, I guess.
yeah,
Like if you go back a step, so the way we were doing this is we set up a UK PLC, an unlisted PLC. So that was the vehicle that bought our target business, and then that would be, I think the term is reversed in to the listed business, which was being set up by the company we wanted to work with. So we did the setting of the UK PLC, which cost £100, quick and easy, and then we go through the process of the acquisition itself.
Another question around how did you fund the 14 million via a loan, or is this through various other forms?
so it was going to be an initial consideration on the listing. So we'd do the listing and do that. We were going to do lease back on the property. Yeah. And
Yeah,
then the rest was going to be deferred, wasn't it? If I
it was
remember rightly.
deferred. Yeah.
Yeah.
So the remainder was going to come from the future profits of the business. But we'd looked at what the forecasts, we put conservative forecasts together, and we looked at that over the next 5 years, and we made sure we had enough room in there. So if there was a dip in the performance of the business, that we would still could comfortably be able to make the deferred consideration payment. So it's three real sources: one, the sale and lease back, the bonds, and the deferred consideration coming from future profits of the business.
And the deferred was over 5 years or a different time frame?
I think it was three, Rob, wasn't it?
Yeah, it was actually three. We very rarely, well, me personally, when I'm structuring a deal, I very rarely go over three or four because it tends to be kind of one of those weird mindset things with people because, generally speaking, people like to get everything done in 3 to 5 years. If you start to get to five or more, they kind of get a bit jittery.
Okay, and there's another question. So we talked about the broker who was involved earlier. So did or is the broker getting paid their fee? When does that when the sale concludes? Is that when they
Yeah,
get
that
their?
triggers on the sale. Yeah.
Yeah.
Okay, all right. So coming back to the owners themselves, I mean, what would you say was, or has there been a sort of shift in mindset from when you first met them and had the discussion and put the deal together and where they are now? Because often, again, when we're speaking to business owners and you do deals and so on, there's a shift in their mindset. because, particularly with a family-owned business, it's their baby, and there's obviously an emotional journey they need to go through as part of that process. So what did you sort of detect from them during that process?
Very early on, it was just myself and the introducer that the first person that was involved with this, Laz. So there was Laz and myself going on the call with the broker and the owners. And we were doing discovery calls to try and understand the motivation, what they were trying to get out of this, how quick they wanted to do. So all the classic questions that you ask, and all the discovery calls more than anything else. But what did surprise me is the emotions that were involved in it. Now, I've seen different emotions with different companies at different stages, especially during COVID. People were getting very emotional when they were selling their companies or trying to look for help. But we we went down a particular route. We were talking to the brother and the sister. The mother was never involved with this. The daughter was always representing the mother as part of it, and she actually broke down emotionally, yeah, on the call, and because she was so adamant she wanted a particular deal structure and she wanted to be out like next week, that she was missing the point that we were offering her what she wanted, but she had to not we couldn't necessarily provide it the way she wanted. So it took a number of calls to get them into the right mindset that this isn't going to be 100% on day one. And that's kind of what she wanted initially. She was expecting us to literally walk in, here's a lump sum of cash, and she walks out and never sees it again, because she really did not want to be involved ever again. Whereas the son was always kind of throwing in, well, what, I can see a vision for the future. So we kind of saw, hang on a sec, there's two different paths here. And part of what we do when we're doing deals is try and find out what each person's path. Just because two people say they want to exit, or three people want to exit, or five, doesn't mean they're all on the same path. Yeah, so you have to go through those discovery calls to find out what it is that each person wants. And then you engineer the deal to get what you want, but also provide what they need. Yeah. And then you've got a much, much better win-win deal. You've got a much better chance of getting it. You satisfy everybody, and you've got less friction. This is from my point of view. I don't know if you agree, Steve.
I would, yeah, and I think it's at one point at the very start, it was the mentality was one in all or one out all out, wasn't it?
Yes.
And then it was later that it was obvious that Miguel still wanted to be around, if truth be told, but he didn't know how to
Fight
not
his sister.
break the it didn't, yeah.
Yeah.
But then what we'd also found as well towards the end of that process, when we'd flown over to Portugal and sat down with them, spent a really good productive day with them. And then we actually, at the end of that day, we'd agreed the terms of the heads of the terms and had that signed 2 or 3 days later.
Yeah.
What then happened was, as can often be the case, is that the solicitors on their side threw up a few curveballs. One of them, they wanted significant salaries, which was over and above what had already been agreed. But the significant one, which we're just in the discussions with at the moment, is that they had suggested that none of the shares would be transferred until all of the deferred consideration had been paid. And if in that situation, that puts the whole process on hold, because what we wanted to be able to do was put those shares in Frankfurt. So we're still in discussions with that. I'm trying to resolve that with them.
Yeah,
But
and sorry. But like we've already discussed, we went there and the dynamics changed very much. And as we discussed a while back, the next best stage from my perspective is go and see them again, because being actually on the ground changed their whole view of what we were talking about. It went from there was certain friction to suddenly let's do this. Yeah. And I think that we've got to another point where it's kind of there's some friction there where we need to go on the ground and say, look, this is what we want to do. We're in this. We've been here before. Let's go to the next stage, kind of thing. So sometimes when you're doing deals, going and actually meeting face to face is fine once, but the more you do it, it's like a friendship. You're building that connection between the people because you're trying to let them understand that you are genuine in what you're trying to do.
So we've had a couple of questions around timelines. So for this business, for any business sort of going down the direct listing route, what are the key things that take time along that journey, in terms of what has to happen?
Well, I think we
Legals.
were lucky because it was audited already.
Yeah.
Um,
Yeah.
yeah, audit ready at a high level. So it wasn't just audited, everything was clean, as far as you were saying earlier, Steve.
Yeah.
So, and that isn't necessarily the case with all companies. So then you've got a timeline to once all that's prepared to go direct listing.
And
So how long typically would it take a company that isn't audited currently to become audit ready?
you can spend less than 6 months. We can probably do it in 3 just to get everything ready. Because it's more about, it's not so much the numbers. That's what a lot of people think an audit is just about the numbers. It's not. It's the process that gets you to those numbers, and to make sure there's nothing inappropriate or there aren't any holes in that process that you use that would be open to abuse. And that's obviously what leads to fraud cases and various things. So it's making sure you've got all of those systems and processes in place and that they are robust.
And so from the point of being audit ready and then audited, what's the timeline to be listed?
I believe it's something around 3 months after that's done.
Yeah, that's right.
Fairly quick. Yeah.
Yeah, 90 to 120 days, something in that. So it's 3 to 4 months kind of thing.
And then the further question, there's obviously a period of time until that entity can start issuing bonds and acquiring other businesses. So what's the approximate timeline?
You can actually list bonds before you've gone before you're listed, but it's better to do it once you're listed. But you can do it on day one, can't you, Steve? As far as
You
I
can.
understand. Yeah.
Yeah. So the company that we're working with would issue them on day one.
Okay. So, I mean, I guess as build, we need to tackle sort of the good, the bad, and the ugly of it. I mean, if we were talking about what went well on this particular listing and what didn't go so well, I mean, what went well, what went badly?
For me, the best part was definitely the switch in the rapport level when we went to meet them face to face. That was like probably the highest point from my perspective. Um, the accepting of the deal structure and everything else, that's one thing you're either going to get or not. The low point was the local um, legal restrictions that we've came across.
Yeah.
And for me, they're the high and the low. There's others in there, but I would say they're definitely the peak points at both ends.
Yeah. I think it was certainly an eye opener one. The fact that we had gone over there went a hell of a long way because it's very difficult to get a meeting with somebody on a call such as this. But if you say, well, actually, we'll come and see you on Tuesday. Oh, yeah, yeah. And the mindset shifts and straight away they will bend over backwards to accommodate you. But Rob's right. I think one of the most frustrating things that we came up against was around the property and the restrictions that we did find some ways to get around that because the business is effectively an abattoir. So it's very difficult to repurpose it as anything else. Now, this is where we had a bit of debate, I think, that we can get around the particular article in Portugal that would prevent us from selling and giving the money or the funding to the sellers. But there's a nervousness because it's a personal. If it goes wrong, then they will personally come after you. So and that's what we're just trying to iron that down. Or sorry, nail it down, should I say? And then there's the process with the solicitors, but that's no different whether it's the UK, Portugal, Timbuktu. The solicitors always have the ability to get in the way.
Yeah.
Yeah.
And the only other thing you're going to have is when we do get to that stage and it's going between a UK solicitor and a foreign solicitor, you're going to have the translations, and that's ratified or whatever you like to call it.
Yeah.
So there's going to be an additional cost. So that's something else to bear in mind. If you're doing a language, not just a jurisdictional one, but you're doing a language difference, you are going to have to get everything translated both directions. Otherwise, your solicitor just won't deal with it.
Yeah. So hindsight being a wonderful thing. I mean, Is there anything that you would, if you did it again, do differently on this particular one?
Personally, no. Because everything's you take a lot out of it. Sometimes you'll come across something, or pretty much every deal, you'll come across something and you look at it and think, what? But there's an opportunity for you to go and find the answer. And it all builds up your knowledge bank and your experience of different ways that deals can be done, some of the things that you can come up against and how you overcome them. So the whole process was it was eye-opening, and personally I wouldn't change it.
Yeah. The only thing I would say is if we were going to buy a second abattoir in the country, then we already know that there's certain things that we can't do. So having that, as I said earlier on, having that local knowledge or legal knowledge or local knowledge or whatever it is, or local contacts is another thing. Because we've got somebody on the ground there, it's made things a lot easier. But if we didn't have that person actually in Portugal who's part of our deal team, it would have made it a hell of a lot more difficult. And we may well not have found that legal problem and the loophole that went with it.
Yeah.
So we might have just stormed in, done the deal, and then we would have been personally liable for something because we would have thought, well, we can do it in the UK. Why can't we do it there, kind of thing? Yeah.
Yeah.
So I think for me, going in and doing more deals in Portugal or other countries, it's about just that one extra step. Hang on a sec. Are we clear here before we proceed?
Yeah. So we've had a question really, you touched a little bit on it in terms of some of the other companies that you're looking to potentially add to a bigger group. I mean, what are some of those? What's the sort of criteria for other companies you would look at for bringing into a bigger group for this?
Well, the thing, it's a very interesting industry. It's not one I deliberately looked at. In fact, two different people came to me with different opportunities in very similar space. So I had one abattoir in Australia, one of the largest in the world. I think they're top five. And then there was the meat processing company. And that was an obvious group because one obviously kills them, the other one preps them, kind of thing, right? And then we had the opportunity in Portugal, and it kind of, well, hang on a sec, this is kind of when you're building a group, you not only want similar companies, but you want the supply chain as well. So we were starting to fill out what that looked like. And the one in Australia, the 150 million one turnover that I mentioned earlier, was actually a fifth of the size of the abattoir that we were looking at. But the interesting thing about them is that they were providing to pretty much all the major chains from Taco Bell to local restaurants. They were the company to go to. So what we were thinking with that is that they already knew how to get a route to market, which the company in Portugal was only just starting. So we could replicate their system into Portugal and Spain and the rest of Europe because we already had a model that worked very efficiently. Yeah.
Yeah.
So it's about for me, when you're building groups and when you're looking at other acquisitions, it's what does that company bring to the table that someone doesn't already have in the company that you've already got. So it's not just about numbers, it's about market reach, unique product, that unique selling point, whatever it is, that market reach, individuals within a company, it could be anything. So yeah, we'd identified that, and that's why those companies were particularly good targets for us.
Yeah.
And what's next in the process for this particular business, and sort of really coming onto the point there about other potential acquisition targets? Are you having those conversations right now in parallel?
We've had, I know Laz has had discussions with the companies over in Spain. He's probably spoke. We've had 2 or 3 conversations with them, and we've had initial, we've registered an interest in the ones in Poland and France and in South America. Those are much early stages than the one in Spain. So from completing in Portugal, the next one would be Spain. Potentially then we've got, I don't know how close we are with Australia. That could follow between the Spanish one and any others that we buy.
And there is another side to this which we haven't picked up on, is if the deal we can't move forward with the deal in Portugal for any reason, we really do get stuck, then what you do is you shift focus to one of the other deals Yeah? Make that a primary one, and then go through the exact same process, but now you get the cash from that one to go and put the cash in the other deal. So you actually reverse your, and this is why it's important to have multiple deals uh, at the same time going into the same group, so that you go, okay, well, this one isn't where we want it to be, but this one, if we push it up the line, then it's going to facilitate that deal. So this is why when I'm doing it, I always try and think, okay, what can I leverage with one as much as possible to help the next one in? And if, to play them against each other.
So we're pretty much at the hour. If anyone has any other questions, put them in chat. I mean, do you have any other sort of final thoughts, really, either of you, about this particular deal and sort of how it went and really what you would take into the next direct listing like this?
On a purely, from my perspective, on a purely generic basis, I don't think there's any real difference between doing hunting for companies that are sub 1 million to hunting to companies that are around 50 million. Yeah. So I think if you're going to do deals, think about what you're trying to achieve, because, you know, Steve and I, well, all three of us have been involved in deals at different levels. And I don't think that you should necessarily focus on the smaller ones. They're no easier. They're actually easier when they get bigger, because the mindset of
Yeah.
the owners are far, far better. The bigger the company, I personally think that if I just went, right, as of today, I'm only going to do things. I think the reason why companies are bigger is because their mindsets are better, right?
Yeah.
And as a result, when you're trying to do a deal with them, they're so much easier to deal with. You try and buy a cafe, and sorry, I'm picking on a particular sector, so I apologize in advance. But it's far more difficult to buy a cafe on a deferred consideration because they want all the cash on day one, right? And as you go up through the scale, they just get easier and more open to different deal structures and different opportunities. They see opportunities, that's why they're bigger.
Yeah.
Yeah.
You told me, I thought I was going to say exactly the same thing.
Yeah.
So, yeah, and I think when you work with the small companies, they're just the pickier. I think it's harder to do a deal that's 2 million and or small in terms of revenue than it is to do this deal.
Yeah.
It's a real eye opener.
Oh, sorry. Go on.
No, I say it's a real eye opener, isn't it? When you get yourself involved in these sorts of deals.
Yeah, I was involved in a civil engineering one in Australia at 80 million turnover. And I find that one fascinating because the guy was like prepared to stay with our deal structure right up until the point where private equity offered him 90% on day one. Right? And then he phoned me up and he said, sorry, I'm going to have to go. I said I would have gone at 50%, right? But he stuck around until 90% because he preferred, because we built the rapport and everything else, he preferred to stay with us right till the last minute. As it turns out, that deal fell apart and he came back to me 9 months later. Yeah? Which, so I think it's rapport is a very key part of what we do. Yeah.
Yeah.
Okay, well, we're pretty much out of time. So thanks very much, Rob and Steve, for spilling the beans on one of Synergy's deals. And thanks to everyone who's tuned in. So if you want to get in touch with us and find out a bit more information about deals like that and being part of that, then you can book a call with us. There'll be a QR code at the end, and we'll also put a link into the description. So that's it. Bye for now.